Let's move on to one of the more locally focused operators, and now we must introduce the labour issue. Remind me to do that, Gabrand. Sibanye Gold, right? So they retained the Driefontein Kloof asset. That was a substantial but somewhat mature gold mine out in the Carletonville area. In the split that was brought about in Goldfields, Neil Vroneman comes to the form. They also have assets in the Free State, though, the Beatrix mine. This is all part of the western extent, of course, of the Wits basin, which is the traditional gold location in this geological region. Market capitalization 16.5 billion rand, PE of 10.64, so that's pretty real and reasonable. Dividend yield 6.19. So Vroneman, to his credit, is one of South Africa's sort of best mining operators, Neil that is, and he seems to have launched this vehicle. He's aggressively focused on cash flow. He's made sure that the company is delivered operationally, and the market has really liked that. I mean, the share chart will reflect this.
Yes, until recently. Exactly what you said. He's done a brilliant job. They've done a few little acquisitions. I think the main concern here is, of course, the life extension of the specific mine. Because that comes
at a cost if you scale down.
They had like 20 or 25 years on some of these other mines, and they've certainly been mining it aggressively. So they bought, I think, Village in Crooks or something. They bought a few little ones.
Right, so there's the share price. Okay, so it comes on at like 6, 7, 13 and thereabouts, goes all the way into the 30s, but you're right, it has sagged
it's come back. I think it's now at 17 Rand a share. The main concern is a trading statement came out. They used to operate at similar levels than Anglo Gold when things are going well, if you get ounces out of the ground. They had some trouble, I think, at the Beatrix mine and one of the two other mines. And their cash costs shot up to 1,200 at the latest quarter, which is why people are punishing it at the moment.
And the bigger issue with regard to labour here, we know that in the South African context we have declining numbers of workers because of mines being optimised for cash flow. As a result, we got bad labour action, because it's particularly in industries that are losing jobs and where the thing's not going well that you tend to get aggressive militant unionism. There's the AMCU and NUM saga. It looks as though we're heading for a strike in the gold mining industry in South Africa, notwithstanding these very challenged financials.
Yeah, that's ongoing at the moment. I mean, there's every day a new update on the wage negotiations at the moment, but certainly it doesn't look too good at the moment. But I mean, these guys, I don't know how they should afford to pay increases in double digits to these guys if you don't put some production number against it. But I don't want to go too deep in that. We try to take strikes and so forth out of valuations, because that's not a recurring thing every day. But you need to take those ounces out and recalculate your ounces,
because
your
clearly
sustainable costs.
Concessions are made and general salaries rise in the mining industry, then there's going to be a concomitant reduction in the number of workers, and it gets even harder for them then to mine profitably. Okay, we've got to bring this thing to a head. At its current juncture, given the share price slump, hot or not on Sibanye?
Yeah, I'm going to go not hot as well. I'm going to stick to the big guys.
Okay, and operationally just feels a little threatened. Of course, they're being affected by the same bullion price concerns. I'm going to go with not hot on that one.